Yes, this negatively impacts everyone. In this episode, I'm going to address Biden's agenda, increase taxes on income, capital gains, and inheritances. Get ready. I'm going to share some insights with you that's going to blow you away, but I want you to be prepared and teach you what you should be doing to avoid unnecessary tax. So I'm Doug Andrew, and I've been a financial strategist and a retirement planning specialist for more than 4.5 decades. And I'm very concerned right now because of the government spending during especially the COVID-19 pandemic, the stimulus packages that have been passed. And I want to share with you some of the math because sometimes people have a hard time getting their amount of money that has been spent already by the government, which we do not have. So we have seen the government pass several stimulus packages. The most recent one, as of the recording of this video, is $1.9 trillion. How much is $1 trillion? $1 trillion would be $1 bills lined up end to end from here to the moon and back 200 times. And they are spending this like crazy and they do not have it. How much money does the IRS collect in taxes in an entire year? About $5 trillion. The government already needs $5 trillion just to run their normal budget expenditures. They have spent an additional $5 trillion just on economic stimulus. Where's the money going to come from? Not only that, but Joe Biden, during his campaign, announced that he needed to raise several trillion more dollars to fund a lot of his initiatives. And so I want to share with you some of the tax policies and proposals that he has. He hasn't passed them as of the recording of this video, but he's got Congress in his favor, where we have a Democrat-controlled House and also the Senate. The tie vote can be broke with Kamala Harris, the vice president. So I think a lot of these tax changes are going to take place, and I want to prepare you for what you can do to avoid paying unnecessary tax. So President Biden announced that he needed to raise $750 billion for one initiative. I think that had to do with health care for a lot of the immigrants coming in and so forth. And it's not that we are anti-immigration. I think it's, do we really want to have that kind of a burden to provide health care for all of these immigrants that are coming in? But this is his agenda, and so he wants to raise taxes on income, capital gains, and inheritances so far on his agenda. So let's go through those three types of taxes. Now, income tax, of course, is what we pay in tax on the income that we earn. And he first announced during his candidacy that he wanted to repeal the Trump tax cuts. And then he sort of backpedaled a little bit because when the 9/11 terrorist attacks happened in 2001, George Bush, in order to stimulate the economy, lowered taxes because his philosophy was, let's raise the revenue that's being taxed rather than just raise taxes because we needed to get the economy going. So he lowered the 28% brackets for couples making over $70,000 at the time down to 25%. Trump lowered it from 25 down to 22. Hillary Clinton, if she would have been elected in 2016, wanted to take the 25% bracket back up to 28. Well, Biden does not want to hurt the middle income people, but he's going to have to do that. He says, well, I want the higher income earners, those couples making over $400,000, to be moved from 37%, which is what Trump cut them down to, back up to 39.6. But he's also going to affect a lot of the other income earners that make the average income and higher. And so I think we're going to see the taxes increase from 22% up to 25. The 24% bracket's going to go back up again. But here's one of the big significant changes that Biden has announced that he wants to pass. President Biden wants to take away pre-tax contributions to 401ks. Now, he doesn't want to do away with 401ks, But if a person was making, let's say, $100,000 a year, if you wanted to contribute $15,000 to a 401k, you only had to report $85,000 on your 1040 tax return. He wants the entire $100,000 to be reported on your tax return, and then he will allow you to have some credits because you contributed to a 401k. But it may only be about 26%. So if you are in a marginal tax bracket in excess of 26%, which many Americans are, you are going to have to pay more in tax. So he's going to be increasing a lot of people's income tax rates that they're paying and the amount that they pay in income tax. The other huge difference is capital gain taxes. And this is the tax that you owe when you sell a highly appreciated asset. So let's say that you have parents that bought a rental home or a duplex years ago, 30 years ago, for $250,000. And let's say it appreciated at 5% a year. That's going to double in value every 14.4 years, about every 15 years. So we see a lot of Americans who purchased a property 30 years ago for $250,000. In the first 15 years, it doubled to $500,000. The second 15 years, it doubled again to $1 million. Now, a lot of people keep putting off selling that because they don't want to pay a capital gain tax. Well, a capital gain tax is usually less if you sell the property on the gain, because a lot of people depreciate the property down to get that tax benefit. And so you have this huge gain. And so people don't like to pay that. And so they keep doing 1031 exchanges and postponing until they pass away and they leave it to their children. Now, if a child inherits $1 million rental property from their parents that has been depreciated down, the capital gain tax would have been 20% under the Trump tax cuts. I sold a highly appreciated commercial building about 1.5 years ago, and I had to pay a full 20% federal plus 2.8% to the Obamacare surtax, plus another 5% to the state that I live in. So I had to shell out about 28%. Under Biden's proposal, he wants to double that from 20% up to 39.6%. But he also wants to do away with the step-up in basis on long-term capital gains. What is the step-up in basis? The step-up in basis allows a husband and or wife to pass down upon their death a highly appreciated asset, like this duplex or rental home that I'm talking about, and the children get a step up in basis. So let's say it's worth $1 million and they inherit it. They only have to pay a capital gain tax on what they sell it for over and above what it was worth when they inherited it. So let's say a year later they sell it for $1,100,000. They only have to pay 20% on the last $100,000. That's only $20,000. That's under the Trump tax policy. Biden wants to do away with the step-up in basis, meaning that if children inherited that $1 million property and they sold it for $1 million or $1.1 million, they would have to pay 40% on the entire million, or about $400,000. See, a lot of tax revenuers like to tax people that are 6 feet under, which takes me to the inheritance tax. The inheritance tax, which is also called the estate tax, is what the government assesses on estates after both the husband and wife pass away and they leave it behind to their non-spousal heirs. Now, there's a huge exemption for the husband and the wife of $11.5–12 million that keeps going up. But Hillary Clinton, she wanted to lower that back down to $1 million again, because many states, they will charge an estate or an inheritance tax on everything above $1 million. So that's called the inheritance tax. Whatever happens, President Biden wants to increase that from about 40% up to 67%. Because again, when we're talking about tax revenuers like to tax people who are 6 feet under because they can't complain about it. The children can, but they sort of have to just accept whatever they get. The point is this: we will see inflation because the government doesn't have the money. They're going to be printing money. Taxes will be going through the roof, and you need to prepare yourself so that you can avoid unnecessary tax. So let me show you what you can do so that you can slowly and strategically convert a lot of your assets to tax-free accumulation vehicles. What are they? So before I tell you what that is, be sure and share this with somebody who really needs to understand where we're headed in America. Taxes are going to be going through the roof and inflation is around the corner. And like and subscribe to this channel. Stay with me here. I'm going to gift you my most recent best-selling book, The Laser Fund, How to Diversify and Create the Foundation for a Tax-Free Retirement. And you can get income tax-free even if you're not retired yet. So why is this so significant? Because we have a lot of initiatives, and heaven forbid, if we try to provide Medicare for all or free college tuition, that is estimated to cost $100 trillion for each of those initiatives in the next 10 years. You divide 100 trillion by 10 years, that's 10 trillion a year. That on top of the 5 trillion that we spend every year in the federal government, and we're talking about triple. Where is the money going to come from? Well, I want to make yourself immune from taxes and inflation. You can learn how to do this in this book called The Laser Fund, How to Diversify and Create the Foundation for a Tax-Free Retirement. This is actually 2 books in one. This has been flying off of my warehouse shelves. I'll tell you what, I will buy the book. You simply contribute a nominal amount toward the shipping and handling. I'll cover the rest of that cost. And I want to send this book out to you. And there's also other options when you go into laserfund.com. L-A-S-E-R, laserfund.com. Click below. And there's other options there if you like to listen and learn or watch and learn. There's master classes there. But this will help you to be able to convert 40%, 50%, even 60% of your retirement assets that are totally tax-free. The government knows you're receiving the money. You're actually helping out America more, and you will understand why when you read and study this book. So my invitation is you take ownership of your future. Make yourself immune from taxes and inflation.